Welcome to Maps and Meta-Analysis.
Looking at California cities. Hi, I'm Darvesh Borhe.
And I'm Justin Hurst, and this is Facts and Folsom,
a meta-analysis.
Hi, everyone. Welcome to a special episode of Facts and Folsom. I'm McLean, and I'm joined today by my co-hosts, Darvesh and Justin. And today we're going to be diving in deep on a topic that's recently come up in some of the city council meetings. This is the structural deficit in the Folsom city's budget. We got a lot to cover today. We prepared a lot of research in advance. We're definitely really excited to get started. So how about we start with a really just good leading question. What is the structural deficit? What does that mean? And what does it currently look like for Folsom?
Is that to either one of us or just
either one, whoever wants to jump in on that.
Yeah, so I guess for people who have been following the podcast, we've talked about it a couple times, but for those whose first time this is, basically the city of Folsom is spending more than it's taking in terms of revenue, and this is dipping into something called the unassigned fund balance. And that unassigned fund balance is basically kind of like a rainy day fund. The idea being that a city kind of saves up some of its excess revenues over the years, and when there's kind of an unforeseen circumstance like the 2008 financial crisis or COVID, that money from the unassigned fund balance can be used to pay like government officials, keep services running, pay different contracts or contractors, whatever projects are sort of ongoing. So the idea being that you keep sort of a set of reserves to smooth out the process during times of like recession or hardship. But the way that Folsom's budget is currently structured, it seems like all of our kind of critical ongoing expenses are actually more than the kind of just revenue that we're taking in. So we're going to essentially eat into this unassigned fund balance, or like rainy day fund, and it's projected to be pretty close to zero in maybe like 3 or 4 years. So it's a pretty big topic of discussion. It was actually discussed in the most recent city council meeting as well, and it's been discussed pretty much every city council meeting for the past few. So we thought we'd go and take a deep dive. I don't know, Justin, is there anything you want to add?
Yeah, I'll just add that, as Darvis mentioned, and as we've covered on the podcast before, the city manager is responsible for proposing the budget to the city council, who then votes on it. But for the next 5 years, that's what's going to be eating up that unassigned fund balance. But the big thing, and one of the things that we're also going to discuss in the podcast today, is that's really only a short-term solution. Once you get past those 5-year periods, or maybe even a 6-year, depending on how the specific sales tax and property tax revenues work out, the city's going to run out of unassigned fund balance without a change. So then that brings into a lot of implications for, well, what does that mean for the city? How is it going to be able to like get rid of this deficit? Because we can't functionally just be losing money. Like the city's going to have to balance its budget. So there's a lot that will go into that, a lot of things we'll consider, and hopefully you'll find this compelling, all the research that we've done and talking about possible routes for the city of Folsom.
Awesome. Thanks, you guys. Yeah, no, so like they'd mentioned, at the end of the fiscal year of 2022 to 2023, the city ended with a deficit of $596,767. The thing that makes this a concerning topic, or definitely a pressing topic, at least for the city council and the city manager, is that this deficit is expected to increase each year. So it's not, expected to be this consistent, roughly $600,000 deficit every year. I think in a few years, I believe 3 to 4 years, they were expecting $4.6 million to be the deficit. And so currently, and this is according to the latest, I think it was the latest budget that they had passed, the current unassigned and unreserved general fund balance is, in between, it's about $22.43 million. And so while, $600,000 eats into that a little bit 1 year, as that, that gap kind of grows and grows and grows, it only gets worse over time. And so it's definitely pressing that the council, find a solution on this now. So a little bit of context. Yeah, so we can kind of dive into, I think a good question when, kind of approaching this topic is, to understand, look at the past, like, has something like this happened in the past? And so we did some research on like the Folsom city's budget proposals, looked at all the years that they had recorded history for on their website, which starting in 2009, there was a 2006, and then it was 2006 or 2007. I forget which year, but it jumps then to 2009. And right from the get-go, the only like comparable event that we can kind of see this sort of deficit take place in was during the subprime mortgage crisis that started in 2008. Obviously, that doesn't paint like a really warm and fuzzy picture. Looking at the economic, outlook of the city, obviously conditions are very, very different economically now than they were then. Different inputs and other factors. But it's important that we understand some, the history and the context while approaching this topic, just to see if there's anything we could have learned from the past. With that being said, though, yeah, like very different economic environments. The housing market hasn't really collapsed in the same way, and the credit environment is much more stable than it was back then. So I feel like there's more the city has to play with now than back then. It was just, very, very, very turbulent all around. I'm curious though, real quick, we've been drawing I've been drawing a lot of parallels between 2008 and now. Wanted to ask, kind of like how we ended up in this position. I think we can all, take some guess, but Darvish, really curious if you'd be able to, kind of answer that question. Like, how did we get here?
Sure. Yeah. Yeah. So one kind of, I guess, I don't want to say glaring thing, but a trend that has been kind of in the works for a while, and that doesn't really seem to correlate with any kind of obvious event, is the flattening of sales tax revenue. And so for the video listener or for the video watchers, we'll put some infographics whenever people are referring to certain figures, so you can kind of see and kind of watch along. But for audio listeners, I'll try to describe as best as possible what's going on. But in the kind of notes, we'll kind of link to the doc that we use to organize our thoughts, and you can take a look for yourself. But basically, in the 2016-2017 fiscal year, there was there was kind of a split between the increase in sales tax revenue and the increase in property tax revenue, which are the two major sources of revenue for a city. So essentially, the state of California, in our case, like levies property tax. Some fraction of that property tax goes to the city. I think cities can levy like kind of additional percentages here and there. So there's kind of like a base rate, and then whatever the city sets on top, and the county and so forth. And a similar thing can happen for sales tax. So there's kind of a base sales tax rate for the state as a whole, and then cities can kind of add on top of that. So if you've ever gone to like the Bay Area or Los Angeles or something like that, you've probably seen that the sales tax is sometimes higher. Sometimes as high as like 10.5%. But I think the sales tax rate for the state as a whole is around like 7.75, something like that. So yeah, basically that's the two kind of major sources of revenue. There are other sources of revenue like grants and things like that. But these are the two that are closely tracked in a lot of the budget discussions and are prominently highlighted by the CFO and the city manager during their presentations. And basically what happened in 2016, 2017, that fiscal year, the sales tax continued to grow, but it grew at a much, much slower pace, whereas housing continued on a pretty much linear, maybe slightly exponential rate. And so this decoupling has basically created a shortfall in terms of revenue, or expected revenue, I should say. Essentially, if you would extrapolated before 2016, you would have expected both lines to kind of continue growing up. And so any sort of like budget attachments that you better budget allocations that you have made, would sort of account for there being that much revenue. So if you're doing any sort of like infrastructure projects or any sort of like development, or the Folsom Plan area, you're kind of in the back of your mind, like counting on that revenue to some extent, because these things take a very long time to plan out. So that's kind of the main thing. And then basically beyond that, I tried to find a bunch of kind of corresponding evidence to support that fact, which I'll talk about much kind of later in the episode. But I wanted to kind of pull out some other small details. I don't think any of these details by themselves is like a smoking gun or like a silver bullet to these problems, but just stuff that I found interesting from the kind of various budget discussions and kind of completed budgets. And so, excuse me. basically in the 2022-2023 fiscal year budget, which is like the most recent budget that was passed, there's kind of an interesting line that stuck out to me that could suggest at least a portion of where this deficit is coming from. So I'll just read the quote. Basically, they say, in addition, the CalPERS investment fund performance over the past several years has been mixed. Because the balance of funding is provided by the employer contributions, when returns decline, employer contributions go up. This will mean annual increases of about $1 million to our general fund contribution throughout fiscal year 2022-2023, likely continuing with a similar trend into the future. And so this was interesting because of that line, the balance of funding is provided by employer contributions, and when returns decline, employer contributions go up. So essentially what it's saying is like, whatever pensions are essentially promised to people, if the investments that CalPERS makes can't do it, then essentially the current employers and whatever employees they have, they essentially have to kind of pay up the difference. And so this could be potentially one reason. I know, like, I actually don't know about the CalPERS performance overall, but it could suggest that maybe if things are correlated with like a recessionary environment, that would mean that whatever things that CalPERS has invested in have gone down, and so correspondingly that burden is sort of passed to everyone down the chain. And $1 million is not an insignificant amount. It's definitely more than the deficit was, this year. But that represents a little under 1% of the total budget size. And if it's projected to kind of increase in the future, then that's kind of an issue.
Definitely, no, that's pretty significant. I mean, one quick question: do we know like what CalPERS invests in? Is it like a mix of stocks, bonds, treasury, bonds, stuff like that?
Yeah, I believe all of their investment information is public, so I don't have the information off the top of my head. But yeah, I think more or less you're right. Basically, they invest in stocks and bonds. They, I think, tend to get some preferential treatment from different asset managers, because I think the idea is that if you're someone like Vanguard or BlackRock or something like that, you can essentially because you're managing such a large pool of money, that it's like you're effectively working for one customer with a large allocation rather than a bunch of customers with sort of smaller allocations. So I think they give them like preferred like management fees and things like that. I also know that there are some things that essentially like public investors don't typically, or I should say like retail investors don't typically have access to. So these could be things like private equity or venture capital. Ironically, the state of California doesn't invest a ton of its fund in venture capital, as far as I know, but it's sort of understandably so. It's like very correlated with recessionary environment. Justin has pointed out to me that the portfolio invests in stocks, bonds, real estate, private equity, inflation-linked assets, and other public and private investment vehicles.
Very diverse portfolio.
Yeah. So yeah, another private one might be like a REIT, like a real estate investment trust. So basically you pool a bunch of properties under like one kind of fund, and then the rents and proceeds you collect from that kind of go to pay dividends to shareholders, things like that. So yeah, that was one interesting point I found. And then pretty much everything else was a mixed bag. But because the proportion of spend has stayed roughly the same over the years, the only kind of notable change I could find was that the percentage of pay that firefighters get out of the budget went from 21 to 25%. And that's only like a 4% change. But since they already made up kind of like a fifth to a quarter of the budget on an absolute dollar amount, that's quite a lot. That's what would amount to now to like roughly $4 million plus.
And Darvesh, does that include the unpaid overtime? That's been an issue we've heard about.
No, I couldn't really separate the overtime from the actual like base salaries. So I think that because the budget just essentially shows whatever is allocated ahead of time.
Yeah.
So yeah, unfortunately, we don't get a good look into how many overtime hours are being worked, how they're being compensated, if they're being delayed at all, et cetera, et cetera.
That's interesting. Yeah, and for the listeners, the fire budget in 22-23, or in the general fund budget, was 23.95%. Second only to the police budget, which was 26.04%. So like those two alone make up, I mean, basically half of the city's budget.
Yeah, exactly. And yeah, I guess the only other note I'll kind of make on that is that I think perhaps a difficulty, and this sort of relates to the await financial crisis as well, is that a lot of these services, and not just police and firefighters, but those are maybe the most notable and kind of highest net dollar amount examples. These services are very easy to ratchet up, but not to ratchet down. So, for example, it's not the same as like, you hire like a librarian, or like, a librarian works like 1 extra hour or like 2 extra hours in a day, and then they just get paid like a little bit more, or like the hours get cut, but like the same days are sort of open. Police officers and firefighters, there's a lot of upfront cost in terms of like, facilities, vehicles, that they need to ride along in, which shifts they're covering, any sort of training that they need to go through. So there's a huge kind of, it's not really, I mean, I guess it's like a human capital investment, right? You're really investing in these people to give them like the appropriate skills and resources that they need to do their job. And so I think understandably, it's kind of hard to ratchet these things down. And these don't seem to be, I want to be careful when I say this. It doesn't seem like whenever the budget of the fire department or the police department has come up, the kind of expenditures don't really seem to be a problem as far as the priorities that the council sets and that the citizens, rightfully kind of voice. So we even heard like the last city council meeting, people talking about a lack of policing and things like that. So this is definitely not some kind of opaque or esoteric thing that the council is doing. They're very much listening to their constituents. But yeah, unfortunately, it is one of those things where there's like pensions involved, there's unions, and so you can't just like 1 year hire a police officer and like the next year fire them. So I think that's what makes a lot of this discussion very sticky, is there's certain services that have ratcheted up, and now the pool of things that you can cut from is a bit smaller.
Right. Yeah. No. And that makes sense. And it definitely is it's a tricky topic to handle. Because of the necessity of those services. And like the value that they provide to the community. They're completely necessary. But definitely, yeah. Like what proportion of the budget and how much. Obviously, that's a bit more nuanced to talk through. I'm curious what you both think. I'm going to open the floor up to Justin as well, just so we can get some thoughts. And if anyone had found anything on the effects of COVID on the city's budget, because it seems like the structural deficit is coming right off of the heels of the pandemic. Did we find any correlation between the pandemic expenses and the disruption that the pandemic caused and this budget deficit?
I mean, the only two things I can comment on for that is we definitely saw the unassigned fund balance being drawn down, but it recovered actually quite quickly, much quicker than the in 2008. So yeah, I think in your research, McLean, you essentially found that like the unassigned fund balance didn't start increasing until 2012. So a full 4 years after the actual crisis had, I mean, the crisis didn't really abate, but the kind of acute shock of it had abated. Whereas in this case, I think the unassigned fund balance started to increase almost exactly the year after. Let me double check that actually in our
yeah, it dropped from 2019 to 2020. It dropped 6% almost, right, year over year, and then it rose basically 7% from 2020 to 2021. So with the exception of 2020, it almost looks like just like it dipped real quick and then continued rising at the same rate that it had.
Yeah, so I think that's there's a parallel in some ways in that the year that there was an acute shock, the balance was drawn down. Also, I think part of what perhaps helped or changed this outcome was that I know there was at least one grant from the federal government. I believe it was the APRA grant that essentially provided a very generous amount of money to cities to kind of use however they saw fit to cover kind of basic goods and services that their residents needed. I think the leftover amount from this past fiscal year was something like $4 million. So I don't even know how much was spent before that. So those are maybe two factors of why we see this kind of like sharp drop and then sharp increase again.
Okay, no, that's good to know, because I think most people's intuition, would take them there like, oh, this is a COVID related thing. But, what we're saying is that while obviously not, inconsequential, COVID might not be the biggest or the only contributing factor to, the structural deficit that we're seeing. And I think that's definitely really good to know. Want to kind of talk a little bit about Darvish. Did you have any more like points to go through on this one?
Yeah, really, I'll kind of go through the next 2
Okay.
points rather quickly. But I was trying to look for evidence of, not evidence, but like rhetoric of how Folsom thinks about this situation. And so basically they published this very detailed plan, and they try to highlight some trends in each of these plans to decide how they're going to plan for the future. And essentially, I found an interesting contrast between the way they thought about the future of housing versus the way they thought about the future of retail. And I think it could perhaps point to how, why the approach has been kind of different in each circumstance. So I'll try to read a little bit of each. I'll try to shorten it wherever I can, but these are kind of long quotes. So basically, in trend number 1 in the most recent kind of plan, which I think was only updated in 2018, but it's nice because it kind of gives a forward-looking statement of how they thought about this before COVID. They say trend number 1, the changing nature of the American household. The nuclear family has been on the decline for decades, and the traditional family, mom, dad, and 2 kids, is now a minority. During the significant growth period for American suburbs in the 1970s, the nuclear family made up 40% of new households, whereas today it accounts for less than 20% of new households. They cite some more statistics, and then they say what this could mean for Folsom. How does Folsom address this shift? Do we continue to plan and build for a shrinking segment of the housing market, single-family homes, or encourage new housing types in the city? At any rate, new housing types should respect the local character and building intensities. And so I thought this was pretty interesting because they clearly see the changing housing landscape as existential for the city. And so kind of in contrast, trend number 6 was called shifting retail preferences. And the quote, I'm going to quote some of it for you. With the growth of online shopping, websites like Amazon.com often provide consumers with lower prices than brick and mortar retailers. Increasingly, shoppers are completing their purchases on their smartphones. Online retailers will compete strongly against brick and mortar retailers that rely on convenience purchases or having the lowest prices. Consumers cannot stroll, window shop, meet friends for lunch, or try clothes online, et cetera, et cetera. And then what this could mean for Folsom. Folsom has a strong and growing retail economy that is responding to the changing retail landscape. The Palladio is an excellent example of a shopping center that creates an excellent shopping experience that cannot be replicated online. Shopping centers that do not offer that experience may have to retrofit their facilities or otherwise change to woo consumers away from their laptops and smartphones. And so what I felt like was kind of interesting about that is that they almost say like, hey, like there's online retailers, but it's okay. Like, we have great shopping experiences. Look at Palladio. Like, I'm sure they'll do fine.
Mm-hmm.
So I thought the tone was kind of interesting, that they almost see it as like, well, you could never, online could never beat Palladio, so we don't really have to kind of worry about these. I mean, obviously I'm like being a bit facetious there, but I think the tone was very self-evident.
Yeah, no, that is fascinating, especially like given the rise of online shopping and like Amazon's like, huge growth in the last like 2 decades. It's interesting that like the position or the tone might still be like, yeah, like, we're still like bullish on brick and mortar, despite the rise of online shopping. Do you, I mean, I'm going to ask an opinion level question, because I think this is like interesting and hard to research. Do you think that is a miscalculation in your opinion? Do you think that like online shopping might be more important than it's being given credit for?
Yeah, definitely. I think there is a point that they're making, which is a very salient one, which is that there's some retail experiences that are just better, or I should say that there's some consumer spending experiences that are either only possible in person or better in person. So I'm kind of thinking of like recreation. So like something like Sunsplash or maybe like a Top Golf or something like that. That's like, there's no world in which, I mean, I don't know, unless like VR headsets get like really good.
Unless the metaverse gets, super crazy.
Yeah, I don't know. I mean, I've seen some like crazy like gloves and things like that. So I don't know, maybe like 20 years from now or something like that. But for now, as far as like what draws people in, and there's kind of a sense of community around it, especially when you go to things together. Like shopping can be it seems like a mostly solitary experience. And I think the point about Palladio is a good one in that because there's a movie theater, there's kind of like stuff around it. So, it's like, oh, you get dinner and then you go to the movie and then, okay, maybe you get like ice cream or something nearby. Or, you just like hang out with friends and kind of like lounge around nearby. So, yeah, there was kind of a point to that. But yeah, it felt like the city was quite facetious, given the fact that this Folsom General Plan was adopted in August 28th, 2018, and amended in August 24th, 2021. So this is like well after the flattening of the sales tax. This has gone on for a full 2 fiscal years in a non-recessionary environment. So it kind of begs the question of like, okay, why the sort of lackadaisical attitude?
Yeah, definitely good. Pretty appreciate that. Um, well, I kind of wanted to talk now a little bit about, kind of where all this is headed. Darvish, fantastic context on, kind of some of the how we got here. Amazing analysis. I know, Justin, you had spent a considerable amount of time looking at like what's ahead and where are we going. Do you want to talk to that a little bit?
Yeah, I'm happy to. So just to couch in a little bit of the context that Darvish mentioned earlier, the short-term strategy that the city has basically endorsed with the adoption of this budget as presented by the city manager has been to draw down that unassigned fund balance in the next few years for the short term. But that's only a short-term solution. So after those 5 years, once that unassigned fund balance is effectively zero, what is the city going to do? Well, I mean, when you're dealing with the black and white, like here's my income, here's my expenditures, there's really 2 routes to go there. It's like either increase your income or reduce your expenditures. So a lot of this is more political consideration because we don't necessarily know who the city council is going to be or what the financial situation is going to exactly look like in that time. I think it's fair to make a judgment based on the history of Folsom, what it seems like the city council values across the board, as I think it might be likely that future city council members also share some of those values. So I'm going to start with the cut side of things because I feel like while there maybe is an aspiration to increase revenue through a couple of different ways, I think understanding what the cuts would be would also be important to even understand why increasing the income could be something that's desirable. So as I see it, what Folsom undercuts would look like would probably be a reduction in service levels. So that could be manifesting in a couple different ways. You could see across the board cuts where instead of just picking one facet of Folsom or the one department, the city council and city manager decide to just reduce spending across the board. For reference, the current cost of service level increases just for this fiscal year, as presented in this fiscal budget, was about $4 million, which is, a lot of money. Much of it was driven by keeping up with inflation, increasing service costs, increasing wages, that sort of thing. And a lot of the increasing services for the developing Folsom Plan area. Like, for example, McLean mentioned earlier that fire department is almost a quarter of the budget. They're getting a whole new station here in the Folsom Plan area. They just broke ground on that, Station 34. That could also mean that the city council decides to kind of halt the growth of the services in the Folsom Plan area. That's one specific way that they could target it, or they could distribute it more evenly throughout the entire city. I feel like it would be more likely that they would kind of pull existing resources from the city to the Folsom Plan area, because if you have one area that's not really covered by existing city services, when you're trying to attract growth and increase housing prices in the area, that's not going to be advantageous for the city. So for someone like me who does live in the Folsom Plan area, I feel like I won't feel such a change as much as people who live in other parts of Folsom, if that were to be the case. There's also the possibility that the city council does do a targeted service reduction. So what this could mean is that they pick 1 or 2 specific areas of the budget to pull from. One thing that we did see happen in the budget discussion during that city council meeting where they did talk about the budget was that they decided to take the city manager's recommended budget, and there was an IT fund that was recommended to be created, and the city council decided, no, we need that money for something else. So they just completely eliminated the creation of that fund. That is going to be piecemeal here and there. I don't really feel like the city council is going to be able to get a lot of mileage out of that sort of thing. So especially if it's a systemic structured issue like it seems like this is, they're going to have to go for like some of the bigger pieces of the pie, the departments, the parks and rec. I think that given that the fire department and the police department are such big portions of the budget, that is a possibility for the city to meet the resource gap. That being said, it seems very politically infeasible. No one likes pulling money away from firefighters. The city of Folsom is very pro-police. We've seen that in city council meetings, even when they're saying we need these positions, even if the chief of police doesn't think it's an emergency. I don't see that changing in the next few years, barring extenuating circumstances. So I don't really think that would be viable. I think what would happen is probably staffing at some of the city administrative departments will be cut, especially because staffing, especially, sorry, I'm saying especially that, with those CalPERS increases at the state level, when you're getting rid of a staff position, you're not just getting rid of that base salary, you're getting rid of all the benefits you pay in too. So I think the city might see that as a big bang for their buck, even if it means like the existing resources and the existing staffers are more stretched thin, doing things like the trash, doing things like Parks and Rec, all of the other services you can imagine in the city. So that's the not fun part, which I think needs to be articulated well if the city is interested in increasing revenues. Because if it is interested in increasing revenues, that's going to have to happen largely through a tax proposed to the voters. The one that has been talked about, and we've mentioned a couple of times on the podcast because it's been brought up in city council, is a sales tax hike. This is something that can put us more towards the growth trend that we were expecting to be on until 2016. The number that has been floating around is a 0.5% tax hike, which would definitely put us back on the right track. That would have to be put on the ballot by the city council after a vote, which I would imagine if they do decide to go the increased revenue route, they would probably vote for it almost unanimously. I don't know how politically viable that is, though, because if we're looking at the past, this is not a new thing. Folsom actually had a vote on a very similar price increase. I think it was also 0.5% in the last 6 years. And the margin for the vote was not great for the city. I think it was something like 70%. It's somewhere in our notes. But it was a by and large, people rejected it.
So to be clear,
yeah.
Justin, sorry to cut you off. That's something the citizens of Folsom vote on, that
Yes.
sales tax increase. Okay. Does
Yes.
does that kind of vote come in its own special type of vote, or is it packaged in with like a larger voting, package?
So I think the city does have the capacity to do a special election. That being said, I'm not familiar with the city constitution or the bylaws. My guess is they would do it during an election year, especially since they happen every 2 years. So it probably would just be another thing on the ballot. Like when you go to the local section, underneath the state propositions, you're going to see like, oh, do you want to vote yes for increasing the sales tax in Folsom? I'm pretty sure that's how it manifested last time.
Yeah, and I can definitely see that not being widely popular, especially like given the rise of inflation, then the extreme like cost of living increases. So yeah. Definitely. Sorry to cut you off. Feel free to continue.
No, you're good. I think the one saving grace that is like a beacon of hope, perhaps, for the city council is the demographics are changing. We have a lot of new people moving in from the Bay who probably are more used to those increased sales tax fees. So it could increase the percentage of the voter base that's like amenable to that kind of thing. And you also have potentially some people moving out of the city because there's a flight from California to other states that are cheaper. So if the city council is able to articulate in an effective way, hey, here's what this sales tax increase will do for you, and here's what happens if we don't pass it, it's possible. And it's hard to say, like, depending on how it all works out. I know one thing that we've also covered on the podcast is the economic development consultant that they're hiring for the city. Like also is a political avenue to say, well, I mean, if the expert's going to come in and say, hey, we can't really help you with the city revenue unless you increase the sales tax, that might also help, because I don't think they had that last time.
Right. That's a very good point, by politically speaking, because I was going to ask, like, who would ever vote in favor of a sales tax increase? Like, I'm gonna be honest, like, my like base lizard brain would never go for a sales tax increase because it's money out of my pocket, right? So I think that's actually a really good strategy, and it's important that there are strategies that like the city can take if they, especially because it does, considering the data that we're seeing, it really does seem like the obvious choice to make is, what, yes, we should make this, 50% or excuse me, 0.5%, right? Yes, sales tax increase. So Yeah, no, good point.
Yeah, that's interesting. I also wonder if, I mean, as the podcast gets bigger, I would love to do polls from residents. Because, for example, I think it would be interesting to get people's opinion on, would you be in favor of a 0.5% increase if all that money went to, X? Right. So maybe some people would be okay with it if it went to exclusively police and firefighters. If you just said that, like, hey, we'll essentially like allocate all of this money to whatever the existing budget is, and that's the only place it can be kind of allocated to, then kind of the remaining money can just be allocated elsewhere, probably. Like you could just shuffle things around, and that might kind of mitigate some of the negativity around it. I mean, is that a possibility? I mean, I guess to what extent can you explain yourself in these like proposition ballots?
So at least when I get my ballot, I usually get one of those little voter guide booklets with it. And in the voter guide booklet, like there can be the pros and cons side.
Yeah.
With regards to the specific language, I'm pretty sure that has to pass through a lawyer to make sure that it's not biased. So if there's a very like nonpartisan way to say, hey, here's what it would mean, without committing future city council members to a specific course of action, because again, it's entirely possible. Like if you say on the ballot, like, oh, if you want to keep the same level of police department, you need to vote for this tax hike. And then the city council that comes in with that same election is so pro-police, even if it fails, they're going to keep the same level. Then you're kind of lying on the ballot. So there's a gray area there where I feel like it has to be more on the marketing side to be able to talk about what that tax will mean than it necessarily will be in the ballot language itself.
Gotcha. So it has to be like non-committal to the extent that, I guess to the extent that it should be, legally speaking.
Yeah. And I'm not a lawyer, so I can't tell you the lines on that one, but
yeah. But I mean, generally, I find those ballot booklets like quite fair in general. I guess to my chagrin, not as many people read them as I would like to, but that's neither here nor there.
And that's a whole other issue we can get into, like the marketing of elections and like how informed the average voter is. But that's beyond the scope of this podcast.
Yeah, well, maybe for a future episode or something.
Yeah,
but is there anything else that you found in your research?
Yeah, I mean, it's we kind of alluded to before, but the other big source of revenue for the city is property taxes. And that's something that's a lot more complicated than sales tax, which is probably why the city's not going down that route. Plus, like, kind of not gonna bury the lead here, it's gonna be super unpopular if anyone tries to increase your property taxes, especially when you're like buying these like $1 million properties that are existing in Folsom. Like any slight percent increase will be huge to your bottom line. That being said, even with a small local rate increase, I calculated that like the median home like price in Folsom, according to realtor.com, is about $780,000 as of July 2023. There's about 28,000 housing units, with most of them being built around 1995, according to the Point Two Homes website. So if we went with a like much lower purchase price, like say $400,000 to account for people who already have houses that they bought way back when it was cheaper, even a 0.5% increase on property taxes would get somewhere in the ballpark of $56 million a year for the city budget, which is huge compared to the 0.5% sales tax increase.
Wow.
So that would like totally fund the city like going forward. They wouldn't have to worry about it for probably several decades. But again, I don't see that flying, especially with existing homeowners. Like they wouldn't really want to increase their existing property taxes because they might actually even be priced out of the city if it's significant enough.
That's incredible.
Yeah.
Sorry, I was going to just really quick jump in.
Very good.
The last year's budget, the split between property tax and sales tax as percentage of revenue, property tax was 35.2%, the biggest portion of revenue for the city. Sales tax was 27.24%, the second biggest, which was much bigger than any other revenue category that the city had. So I just wanted to paint that backdrop as you continue.
Yeah. The other thing I was just going to mention really briefly is there's something called a transfer tax, which I didn't really know about, but I guess it makes intuitive sense. Think of it like a sales property tax. Pretty much when you're transferring your property from one person to another, the local government can come in and tax that sale itself. And that would really only affect the new buyers or sellers. So people who just live in the city of Folsom won't really be touched by it. That's kind of more of a middle ground in my mind, because it can be something that the city can sell better, especially with a lot of the new people coming into the city. So there's not as much like people moving out. Now, one thing I did find that was interesting in my research is it kind of depends on the sale, like who's paying that tax, because you can agree during the point where you're buying a house from somebody who owns an existing home that the buyer pays it or the seller pays it. And it really is just up to who wants to bear that burden, part of the negotiation process. So that one I find interesting, but I haven't heard anything discussed at the city council level about it. So I'm not sure if they would consider something like it. But if it is something that can generate more revenue than a sales tax, perhaps it's more feasible, because the people of Folsom will say, hey, I'm not affected by it. It's going to be the new people.
You said that was the transfer tax. You said that was?
Yes, transfer tax.
I think in the city's budget for last year I think this might be the same thing. They have real property transfer as a revenue category.
It might be what they call it.
Yeah, it was like 0.88%. So relatively small portion of the budget right now. So potential, for opportunity.
Okay, yeah.
Yeah, that's interesting. I wonder, I guess skepticism would be that these types of transfers happen so infrequently. I mean, maybe on the scale of Folsom, they happen a few dozen times, maybe a few hundred times. But yeah, I mean, so I wonder to what extent it can be counted on as a reliable source of revenue.
Yeah, I would only ever see that as something like a midterm solution, because while the city of Folsom is currently growing, it probably won't stay like that forever. So if we reach a period of stagnation or even decline like the rest of the state, then that effectively is not going to be helpful for the city.
Gotcha. That makes sense.
That definitely does.
I know.
Go ahead, Darvish. No, all you, man.
Oh, I was just going to say, I know we talked about kind of politics earlier. So I'm kind of curious, Justin, from your perspective, how do elections and the kind of political optics of said elections weigh into this debate about structural deficit?
Yeah, I think one of the things that I focused on was trying to find evidence that had to do with, like, does an incumbent who's running for re-election want to propose and support a tax increase on their constituents? There's a couple of different articles I looked at for this, which we'll share at some point. But the punchline is basically that if you're an incumbent, you're less likely to want to increase taxes on the people that you want to vote for you, because generally speaking, increasing taxes is not popular. You want to be seen as the bad guy. So there's definitely an electoral incentive there to not support something like that. To the extent that in the city council is multiple people, you can kind of be a free rider, so to speak, if you're running for re-election, by being the person who opposes the tax, if the rest of the city council is for it. But at the same time, if you get enough of people like that, then you give enough ground that you're not having a united city pushing for something that you see as a dire need, and therefore would weaken the chances of like the average voter wanting to vote for it. So I think that oh, and I do have the statistic here from earlier. The last time there was a sales tax increase vote, it was in 2018, and the vote was a 71% to 29% in favor of no. To give you an idea. And then the other thing I found in my research for this question was that in city councils with districts such as Folsom has just transitioned to, there's an additional incentive not to increase your sales tax because there is going to be pressing need for that sales tax increase in places such as my district, the Folsom Plan area. So my district would benefit disproportionately from an increase in sales tax revenue. For the reasons that I discussed earlier about potential cuts. So you create an incentive for some city council members to really be the champions and need it more at the expense of potentially other districts.
Yeah, that's such a fascinating dynamic. I didn't even think about that, but that makes total sense. Of course, the people who are having new stuff built around them would have an incentive to say, like, yeah, of course, I want these increases because we're just a fraction of the area of Folsom, but we stand to gain the most in terms of new amenities and services and things like that. So
exactly.
That is really interesting. Yeah. Fascinating point.
Do you think, I guess, is this a byproduct of district-based elections to some extent? Oh, also, I guess, would the Folsom Plan areas vote sort of be diluted with the fact that they are just part of District 5 still, like they're not their own voting district yet?
Diluted in what sense?
Meaning like their vote, they're not represented by like one whole council member essentially. There's like other constituents in the kind of previously developed parts of Folsom that that council member is also kind of is beholden to some extent. So for example, like the Empire Ranch or like Russell Ranch area, I believe those folks have the same council member as the Folsom Plan area.
I think so.
So, would it be the case that some people in the Empire Ranch, Folsom or Russell Ranch area would say, "Hey, we don't want this increase because we're bearing some of that burden and stuff around us is all developed, so we have like no incentive." Whereas the people in the Folsom Plan area might say, "Hey, we do want it," and those two things kind of cancel out, I guess.
Yeah, I think that's definitely true. Especially even further to your point, people on that side of 50 are more likely to be in opposition to increasing services for this side of 50 because that would be more traffic, and that's been something that we've heard complain about, like at city council meetings and other public meetings. So that's entirely possible, and I think that's a good point. With regards to like the electoral politics of our own city council member that represents both sides of the district, honestly, I think that really just depends on the calculation that the city council member makes, because they can say, hey, like so much of my district now is coming in and growing on this side. So I feel like electorally or just personally, I should align more on this side of the issue. Or if there's someone who's not even seeking reelection and they just like they live in the other side of the district, they might just say, hey, like I personally feel this way. So even though I see a lot of the people in this district needing these increased services, it's not something I agree with. So like that much is very much a gray area, and I think that was a good point of nuance to bring up.
Okay, interesting. Yeah, these are all like such fascinating dynamics, and honestly, yeah, thanks for bringing it up. I'm kind of curious, were there yeah, I don't know, anything else you wanted to add to that, or are there any other kind of aspects of the structural deficit that you want to talk about?
Yeah, I mean, one thing that I would like to kind of pivot to is just a little bit like on how the influence of the state impacts the city's finances. That's one of the big relationships that has changed a lot in the history of California. Like, how does taxation affect the state versus the city versus the county? There's a lot of back and forth in state funds. I think property taxes are a good example where property taxes used to be, before Prop 13, which passed in the 70s, going to local school districts until Prop 13 passed, and then there was also some other propositions that also affected this recently, where now that revenue pretty much goes to the state, and that state then redistributes that revenue back to local counties. So there's a lot of back and forth with that funds. The base property tax rate is what that money is referring to, not really counting the potential increases that we talked about at the local level. There's also a lot of other support that the state gives local cities. Sometimes they'll come in and take over cities too, which is something that we've heard the city council talk about a little bit with regards to housing projects. I don't see that happening in the city of Folsom because the city council has been very much cognizant of that risk, and they've approved affordable housing projects and are still continuing to amend and approve affordable housing projects. With regards to the financial well-being of the state, currently the LAO, the Legislative Analyst's Office, predicts somewhat stable revenue at the state level, even though we're also in a deficit there. As far as I can tell from the different analysis and historic trends in the state budget, like any money that comes from the state to support cities isn't likely to be threatened. There's one interesting exception that's a little bit contentious right now, especially as you look into some of the Cal Matters articles that have come out recently. There was a big initiative from the governor to support local homeless issues, which is something that people in Folsom are passionate about, even though the data shows that we don't have a huge homeless problem relative to surrounding areas in the region. That being said, because of some like revenue shortfalls, that fund had to get cut. or at least was cut beyond what the asking was from the League of California Cities. So there's a little bit of tension on that specific issue, but I don't think that'll affect the overall well-being of the city. It might just be like a knock-on effect for if the city does have any efforts to address its own homelessness issue, there might be less funding for it. Yeah. By and large, I think the Public Policy Institute of California summed it up best in the research that cities are really just dependent on their own revenues. And especially since Prop 13, it's really been that property taxes and sales taxes with some other exceptions. And then I think the strings attached where we are paying the state, like for the CalPERS contribution, those are things that aren't really negotiable for the city.
Interesting. And I guess off the top of your head, do you know that if someone inherits a property from someone who fell under Prop 13, that do they get those same Prop 13 benefits, or is it only for the original purchaser of that property?
So my understanding, limited legally, so asterisk on my opinion, is it depends on how they get the property. Because if it's a standard like transfer in my will, like after I die to my children or whoever, then they will get that new assessed property tax rate. If it's through certain legal, I don't want to call them maneuvers because that might have a connotation to it, but through
like a trust or something, like
like a living trust.
Yeah,
like I think that's a way to get around it.
Yeah, I see. So you bought the property, you put it under a living trust while like the Prop 13 was still in effect. That Prop 13 benefit kind of carries over. This seems like very analogous to like SALT tax or like the carried interest loophole, frankly. But discussion for another day. And so the idea being that those living trusts can kind of live in perpetuity, and that there's kind of no sunsetting of that benefit on that property, unless for whatever reason it gets sold out of that trust, or goes like there's some kind of bankruptcy, a bank claims it, they sell it off, like that sort of breaks the chain of custody.
And the only way I think I see that changing is if there was to be another state proposition process, which arguable whether there's an appetite for that, but we're getting a little too beyond the city of Folsom to speculate on that. So I will just ask you then, Darvesh, do you think there's anything like locally that is interesting now that we talked about the state?
I guess maybe one question I have locally is I honestly wonder if we are not getting as much property tax revenue as we would suspect, given the property tax rate, if there are people who are benefiting from Prop 13. Essentially the property tax increases are putting a disproportionate burden on new home buyers and new housing prices, kind of at the expense of it's essentially like this kind of like free equity transfer to the people who have benefited from Prop 13, because essentially like every new house that has to be sold, they do not get the benefits of Prop 13. So it's like they have to pay, I guess, a larger portion of their income. I mean, it's like pretty crazy. Across the street from where I live, there's like the Lakeview Estates, and I mean, some of those homes have sold for like, it's like a quarter acre and it's sold for like $2 million or something like that. $20,000 a year, and moreover, it's $20,000 of post-tax income.
Wow.
Right, because like you don't get any right. It's like after your federal income tax, state income tax, and then you have to pay your property tax. And there's no, like, as far as I know, there's no like kind of big write-offs or anything like that. So it's like that's just, and moreover, there's at least from talking to my parents, you essentially pay it at most you can pay it in halves. So essentially, which is kind of odd, because then at any point in time you have to have like a pretty large sum of money just sort of sitting there waiting for you to pay that amount.
I mean, that's a car.
Yeah, exactly. Yeah, I mean, like, for a $2 million house, that's like, easily above $20,000. So you're looking at $10,000 every 6 months. I mean, that's like a huge chunk of change to just be, laying in a checking account doing nothing. So I
can't even imagine a mortgage on something like that.
I mean, especially at these rates. I just maybe we should dig deeper in a future episode into Prop 13, because I think it is both contentious, because I sort of understand the people who benefit from it, especially if you're older, maybe you're only living on Social Security, and so it's just fiscally impossible for you to move anywhere, because you have kind of gained that equity value, but most of it has been taxed away. in some form or another, and every other
Mhm.
property is like commensurately increased. And maybe your cost of living adjustments and Social Security have just not kept up. Maybe they've kept up pace with the national average, but as we know, California is far above the national average in many ways, for both ill and bad. For both ill and good. But yeah, I don't know. That's the only thought I had.
There were I know Darvish, you had also looked at some of like you were looking into some data about like Folsom versus like the surrounding area, like regionally, like the Sacramento, Roseville, kind of Arden Arcade area. Do you have any sort of like comments or information to kind of add to this discussion about that?
Yeah, totally. So I got a lot of charts, and I'll put it for the video listeners, but for audio listeners, I'll just kind of describe as best I can, and I'll try to use years to make the point a bit more specific. Essentially, there's this resource called FRED, which is made by the St. Louis Federal Reserve. So essentially, there's the kind of National Federal Reserve. I mean, what they do is like a whole can of worms unto itself, but there's also like these regional Federal Reserve agencies. So there's one in kind of like, I think kind of like the northern United States, like near Michigan, Minnesota, that kind of area. There's like St. Louis. There's one in the south. I think there's one in San Francisco. So they all kind of like keep track of regional data. But the St. Louis one has this really nice web portal where they let you export a bunch of figures and get like really granular data. And so they fortunately had some interesting data for the either the Sacramento, Roseville, Arden Arcade area or the Sacramento, Roseville, Folsom area. So this is like hyper local data. I mean, pretty much as local as you can get other than the city itself. And I try to get some data from the city, but it's like very opaque. So for example, like I try to get the number of permits issued by the city, but they always leave it in like one bullet point, like kind of in the middle. And they always phrase it in the same way, which is that we issued over X many permits. But the number is always like very specific. It's always like we issued over 3,370 permits or something like that. And it's kind of like, okay, like, is it 3,371? Is it 3,700 or 3,379? Like where in this range does it fall? So that's like not as granular as I would like. But a couple of interesting things. So one measure that the Fed tracks is called regional price parities, which is essentially like what are the cost of goods and services relative to the national average. So essentially, if you, I guess maybe the most salient example would be like, let's take the average price of like a gallon of milk across the U.S. What is the average price of milk in the Sacramento, Roseville, Arden Arcade area for that gallon of milk in general? And one of the very interesting things is that in around 2016, California was pretty much at parity with the national average. So essentially, it's measured on a scale from like 100, and then anything below 100, you're kind of like below average. Anything above 100, you're sort of above average. And so, yeah, around 2016, we were almost exactly at average. And then in 2018, so not even just 2 years later, we were at 109. So essentially, our prices were about 9% higher than the national average for this like hyper specific area. So like with these kind of figures, usually people discount it by saying like, oh, well, you didn't control for like the Bay Area, or you didn't control for LA or like San Diego or any of these other like big kind of metropolitan areas. So this figure is skewed. But even in our like relatively affordable kind of mid-sized city in California, we were paying 9% above the national average, which is like crazy. And it has gone down like a little bit over the years, but it still stayed above the average. So I think as of 2021, it was about 107, so about 7% above the national average.
That's really interesting too, because like that's right around the same time that the sales tax tapered. So like consumers largely would not have like felt much of a difference in like the total price of the goods themselves, right? Like prices kept rising. And even though sales tax itself tapers off, consumers are still paying more and more. I think that's something to consider, especially if, a sales tax increase comes back onto the table, right? Consumers probably have not felt an ease of like the cost of like goods in, gosh, a long time, And so I think, no, that's really interesting.
Yeah.
Really
it could also suggest, I think another hypothesis that I had is that, that's kind of proportional to how the volume of money that consumers spend. So essentially, as the regional price parity increases, people just buy like less stuff, or essentially a lot of that might be like discretionary spending and things like that, and so that like those things get kind of cut, and so it kind of reaches this equilibrium on its own. So maybe the sales tax flattening that we've seen is a function of the fact that even though consumers don't know, they don't check like the national price on average, they sort of have a collective intuition about these things, and those things ebb and flow. So that was kind of interesting. The other thing that was kind of interesting is the real per capita personal income for the Sacramento, Roseville, Arden Arcade area. So this is quite interesting because I actually forget exactly how real per capita personal income is calculated. I think it's just like essentially like cost of living, it's like income minus cost of living, more or less. So if your income rises faster than your cost of living, then like the real per capita income should increase. And also, since this is like per capita, it gives like a bit of a better measure rather than like total GDP, which could be influenced by like commercial activities or kind of large capital outlays that are made by like cities and counties and governments and things like that. And so what was interesting about that is like from 2016 to 2018, the real per capita personal income actually dropped in California. And so it was increasing from 2009 all the way up to 2016. From 2016 to 2018, it dropped. And then from 2018 onwards, it has been increasing. So this kind of supports the hypothesis I was talking about earlier, but not completely, because the sales tax flattening that we've seen is rather consistent. So if this was truly like the only factor, then we would have seen essentially the sales tax kind of taper off and then like climb back up again. But yeah, I thought it was kind of interesting that a lot of stuff kind of changed in 2016, like economically, even though we would not associate that time as like an economic downturn or like a recession in a clear way.
That's really interesting. And I'll just like throw this tiny little point in there as well. In 2019, the full load freight or full truckload freight market saw one of the worst like recessionary periods. And it has like different recessionary periods like detached from, not necessarily always detached. They usually do follow like major economic recessionary period. Like we're in one right now, but 2019 was a very specific one, right? And if you see the cost of goods rising dramatically, I mean, this is obviously, we're looking at a small subsample, this region, right, in California. If we were to find supporting evidence that the cost of goods was rising elsewhere, right, maybe you get backed up inventories, and that could mean less like truckload, freight as well. So I just think that's interesting, but it kind of speaks to there are and worse, maybe larger economic factors playing into that 2016, 2017, 2018, that period in the lowering of that like per capita in household income.
Yeah, exactly. The other data that I found that was quite interesting was the all transactions house price index for Sacramento, Roseville, Folsom. So basically, it obviously took a sharp decline in 2008, but then it has risen quite quickly over the last few years. It's kind of hard to quantify it, but essentially, like the slope of the line seems pretty much about the same as between 2005 to 2008, or sorry, between kind of the year 2001 up to 2008. It was a very sharp increase, and then obviously it crashed. And that has been about the same rate of increase that we've seen from around 2012 onwards. So this could suggest that, literally one of the largest kind of expenditures that people have, housing, is going up in value. And then your property taxes kind of go up commensurately, even if your real per capita income is going down. So like all these forces in conjunction might be kind of working together. The other interesting thing was the rental vacancy rate for California. So this is a bit broader. I unfortunately I couldn't get it at the kind of Folsom, Roseville, Arden Arcade area. But actually since 2016, rental vacancy rates in California have been at an all-time low. And at a statewide level, they're hovering around 4%. And just to give you some context, basically in the 90s, the vacancy rates range anywhere from about 6%, down to, I mean, at its lowest point, it was 4%, but it was never any lower than that. And then from around 2001 to 2009, 2008, the vacancy rate kind of increased quite a bit from 4% up to about 8%. So we're sitting at pretty historic lows as far as rental vacancy rates. So it suggests that, not for those that aren't purchasing a house or paying property taxes, the alternative is to rent. But if the kind of vacancy rate is low, to me, that suggests that kind of as a corollary, that prices have to remain high. If the competition for available rental locations is, if it is quite competitive, then that is naturally going to bid the prices up. Whereas if the vacancy rate was high, then landlords have an incentive to lower their price to attract more potential renters. So that was an interesting dynamic. And then the very last one I'll show, which is like frankly the most shocking to me, is that the new private housing structures authorized by building permits for the Sacramento, Roseville, Folsom area is still quite low. So it's kind of hard to explain the chart, but essentially we saw a boom right before the 08 financial crisis in terms of new housing starts, which kind of makes sense. Everyone was buying houses, credit was very available, and so it all kind of just like went into houses. But then it took a very, very sharp decline. And essentially, we're building housing at a rate that's the same as we were building housing in about 1996 or 1998. So despite us having, probably several million more people in the state, and definitely way more people in the Folsom area or the Sacramento area, we're actually building housing at a very, very slow rate relative to the demand that we're seeing. So, it's a combination of stuff is getting more expensive, per capita income is going down, housing prices are very high, the rental vacancy rates are kind of low, and then the new housing coming online is also very slow. So those are the kind of 5 or so factors that I found at a somewhat local level that feel like they could explain some of the sales tax flattening that we've seen. Essentially, if more of your income is allocated towards your housing expenses, then less is going to be available for discretionary spending and things that could contribute to sales tax, or at least that's my hypothesis based on the kind of figures I showed. And again, for the video listeners, I will kind of have them in the background. We'll also link to them because Fred, which is the name of the site, provides kind of like these nice URLs, so you can check them out for yourself and kind of zoom into any time point that you want.
That's super interesting.
I have a follow-up actually. Like, I don't know if this was in the scope of your research, but for that last piece of data that you shared with us, do you know if there's been any trends at the types of new housing that's been coming online? Like, has it been single family homes? Has it been more mixed use? I don't know if you looked into that.
I don't know, because I was looking for that level of granularity. I think there was maybe a stat for single family homes, but I felt like the but I think that wasn't as local. So I ended up settling for the all transactions house price index, because that seemed like, mostly represented by single family homes, at least kind of at an aggregate level. But I know, actually, one thing I did find during my research of the permits that were approved is that so basically from I'll basically start at the beginning of the fiscal year. So in 2011, there were about 3,300 permits issued. 2012, there were about 3,300. Skipping a few years, so 2015, there were about 2016, there were about 5,200 permits. And then ever since 2016, the number of permits issued has actually been in decline. So then in 2017, there were only 4,800. 2018 had a slight uptick, 4,950. But then in 2019, 2020, there were only 3,552 building permits issued. So there's, I don't know, kind of this like opposite effect. Like demand is going up, number of permits issued is going down.
Is there any cause or explanation for that? Like, do we know why like building like a home construction is like not increased substantially?
I think to be fair, this is separating the research now from stuff that I've kind of like anecdotally read. So feel free to fact check me on this. But essentially, the kind of leading theory that I've heard is that the 2008 crisis was bad enough to where for several years it was actually unprofitable for developers to build at all. Essentially, like the cost of the materials and labor that they would put into building a home would not even allow them to break even on that home. And essentially, so for several years, there was essentially like no home building. And because the lead times on homes are so long, there's a ton of permitting, even just something like pouring a foundation. I mean, it takes like, could take like a month or several months in some cases. There's a lot of inspections that need to happen. So because the lead times on a lot of these things are long, and there was such a dearth in that time period, I guess conventional wisdom is that a lot of those companies and contractors went bankrupt or decided to do something else, and so there's kind of a dearth of both labor and materials and supply, and that kind of percolated throughout the supply chain. And ever since then, it's been very, very difficult to get that momentum ramped back up again. That's sort of the leading hypothesis as far as I know, and what I've read, and it seems to kind of generally make sense, which is that everyone is ultimately motivated by their own incentives, right? Like, I mean, I know a lot of people will probably think of like real estate developers as like, you know, these kind of money grubbing, like greedy people, and they're just trying to like squeeze out every dollar. But, you know, ultimately, like a lot of these things might be built by general contractors and, you know, subcontractors and subcontractors. And so they're probably looking at it from their own incentive of like, hey, I could be making $80 an hour being a plumber. Like, why would I do roofing for housing? You know, something like, I mean, that's just like a hypothetical, but you could kind of imagine this dynamic playing out at an individual level and sort of percolating.
Definitely. No, appreciate that insight. I think that's on a lot of people's minds. And as we've clearly outlined, there is like a direct correlation between housing development in Folsom, given like especially the proportion of property tax for the city's revenue, you know, and how, you know, that plays into like the city getting out of the structural deficit. So, well, I wanted to thank you both. Like, this is fantastic research. This is really, really fun to like dive into really deep, and I hope this like reaches the right audience. I want to like open up the floor for like any additional thoughts, questions, anything we might ask, you know, maybe even directly to like the city council, stuff like that. Let's, you know, kind of open the floor a little bit.
Yeah, I don't know. We've alluded to it several times, but essentially there's this very strong reticence to see the elephant in the room, which is that half the budget is taken up by two things, and if those two things are constantly off the table, it's you know, it's a lot of like shuffling chairs on the Titanic, you know, kind of thing. It's like the ship is sinking. Like, this is not the sort of thing to be. And, you know, for context, the thing that Justin mentioned, like the IT fund, yeah, for context, that was $50,000. So this is like the level of things that are being, I mean, we're really scraping the bottom of the barrel when it comes to funds that we can reallocate from one thing to another. And I mean, no slight to the, you know, IT fund either. It's like it was sort of like a discretionary thing and like a proactive thing. So I don't like blame the city council for taking that money. It didn't seem like ill-advised as far as I could tell, and the city manager seemed, you know, okay with it as well. But yeah, I don't know what it will take for people to reconsider how much money we're spending on police and firefighting. Unfortunately, there are two things where it's very hard to measure. There's actually a very good book called Bureaucracy, and it classifies police and as firefighters adjacently as what are called like coping agencies. And so a coping agency is one where you cannot measure the inputs, nor can you measure the outputs. And so like schools would be another example of this. It's like hard to measure the outcomes of students because you don't know what they're going to be like 10, 15 years down the line. And you can't really measure the input of the teachers because everyone teaches in different ways. You know, different students have different needs, like all this kind of stuff. So yeah, it feels like we're kind of in this like between a rock and a hard place with the police and firefighters, where it's essentially like, hey, you know, we need to do more about homelessness, we need to do more about crime, and it's going to keep ratcheting up until it just hits a wall. And I guess I just really don't know what happens at that point.
Yeah. No, that's a really, really good point. Appreciate that comment and that feedback in. Justin, did you have anything as well on your end?
Yeah, I think the big thing on my mind, especially since I focused on looking forward, is personally, I see that there is going to be a tax hike on the ballot in the next 5 years. I think that's an inevitability just based on the situation for the city. So with that in mind, my thoughts that I would ask at least maybe the current city council or people who are interested in city council in the future is, given that this is probably going to be what city council labels as its way out of the budget crisis, what do they plan on doing to market for that? How committed are they to that idea? Well, do they have backup plans? Because I think these are all questions that, even though it's kind of seeming like as far off in the future, need to be thought about now. Because if there's going to be an effective marketing campaign, you need as much time as possible on that, especially as circumstances change for the city. Being able to like really like tangibly like give people a sense of what this is going to affect is going to be crucial for any sort of, you know, super consequential vote.
Yeah, open invite to any of the city council members to come to the pod and explain your position. We would be glad to have you. I mean, even if you disagree with us on anything that we've said, any of the analysis that we've done, we would love to hear your thoughts. So, I mean, I sort of doubt this is reaching that level, but who knows?
Maybe at some point, I
Hey,
think
definitely. Well, we openly invite that. I feel like going forward because that's kind of our whole thing. Like open discussion.
Yeah.
Supporting evidence. Getting to know all of these. All of this nuance a little bit better.
McLean, did you have any follow-up questions?
I did actually. I was curious. This was actually coming out of. I was researching about that contract position that the city was considering. It was like the 1-year economic development contract. It got me thinking about how the city, because definitely I think that's a good idea to hire like a consultant for that, because I think we should be aware and we should have like better knowledge on like the economic development of the city. But like, how does the city normally operate on its like, economic development? Like, what are the normal levers of research that it pulls, right? I know that they have the availability for different, consultants to come in, conduct independent research, but what are those levers, and would they ever consider having someone on staff that like does that research for them, right? Maybe that's a long-term investment for the city, right? We hired this position and instead of paying consultants, right, at a higher rate per like, man hour, right? We have someone on staff. So just something to think about, something I would love to kind of, get into a little bit more if we ever have the chance.
Yeah, I know.
Awesome.
I know, Justin. You probably have some thoughts on this. I mean, I know it's somewhat related to the Chamber of Commerce and Choose Folsom to some extent. This is actually part of our interview with Sherry. I guess it seems like historically, I mean, TLDR, I guess the city has seemed to outsource a lot of this economic development activity to the Chamber of Commerce, which is a nonprofit entity that's like not really affiliated with the city. I mean, it's kind of a misnomer that they are, I guess. Because people hear Chamber of Commerce, they think like, oh, this is like, the Senate or something. This is like the business Senate of the city. But it's like not really connected in any legal way as far as I know. And then Choose Folsom is kind of this umbrella organization that covers the Chamber of Commerce. I believe it's like the Tourism Commission.
Yeah, and then the TED Corp.
TED Corp, yeah, which is like the something Economic Development Corporation. So yeah, it seems like there's been a kind of bifurcation where essentially the Chamber and Choose Folsom are more well connected to the business leaders in the area, and so they kind of like spur on economic development. They lobby at the kind of state level for different legislation. They kind of make their opinions heard during city council meetings. They have presentations, so on and so forth. I think historically that's how it's been done. As far as like measuring performance, I mean, I really can't say like how effective or ineffective they've been. I don't actually know of like an analogous entity in any neighboring areas, but maybe that's something we look into in a future episode.
Yeah, definitely. That's a great follow-up. Something we'll consider. Awesome. Well, I think that kind of wraps up our discussion on the structural deficit. Again, thank you guys for all of the contributions and talking through all this. Super, super fun. I hope everybody enjoyed, listening to this deep dive today. We would love to do more of these like special episodes where we deep dive one subject, in place of, or, in addition to our normal cadence of city council meetings, which you should, be excited to see soon as the city council has, resumed its session after the one week of recess. So thanks again, everyone, for tuning in. We look forward to discussing more, and we'll see you next time.
All right. See you, guys.